Investors and traders, welcome to the channel. Market chart pattern today is 8th of March 2025. Hope everyone is having a great weekend. In this video, we'll be taking a look at the key 5 stocks that we have been following, which are actually beating the market. And these are the 5 stocks we took a look at in a video I did a couple of weeks ago. Last week I wasn't able to do that video, so it's a follow-up to that video. And as the broader indices, S&P 500, they have pulled back, and in fact they are actually negative year to date. There are stocks which are actually beating the market, and this is what the video is about, and we are going to discuss what those stocks are. And if you stick around till the end of the video, I'm also going to show you additional stocks which are also beating the market. So it's going to be something really interesting to watch. And then we'll also try to take a look at some of these stocks and what their chart patterns are suggesting to us. And as always, this video is for educational purposes only. It is not a financial advice. So dear subscribers, before we take a deep dive into the video, just one request. As you know, I've been producing the videos for quite a long time. I'm actually also putting a donation link in the description of the video. It will actually help me cover some overheads such as subscription for the trading view, and of course the time I spent on looking at many charts which I do during the week and present the videos for you guys. So it'll be a big help for me, and also it will enable me to focus more and do more research and then present it to you guys. So thank you very much. Whatever amount you want to donate, it's entirely up to you. I will really appreciate that. Okay, so what we are looking at is basically assets such as the S&P 500 cash, symbol is SPX, and then we have a group of stocks here such as Altria, which is in the tobacco sector with the symbol MO, Jack Henry, which is in the transaction and payment processing services, and then we have Starbucks, which is not the stock we are actually watching. It's just a stock we are watching. It's not a stock which we have been looking in our analysis, but it's on the list as a watch. So this is why I've got in comments on watch. Alibaba, which is in the e-com and cloud sector. And then we have the AMD, which is in the semiconductors. This is also on watch, so it's not part of that list. And then we have the Abbott Laboratories, which is in the healthcare equipment, is with the symbol ABT, and Gilead Sciences, which is in the biotech with GILD. Then column E is actually closed as of 31st of December 2024, so this is the close as of the last year. And then column H is the close as of last Friday, so 7th of March 2025. And then column I is basically the previous week's close, so that's Friday, not the last Friday, but the one prior to that, so 28th of February 2025. And these are the points, and in terms of the percentages, and then we have got the year-to-date points made or lost, and the year-to-date return as well. So let's take a look at the S&P 500 cash first. So what we are now seeing is that the pullback that has been in the broader markets in the United States, it has been pretty deep, and I will be doing a video on Sunday in which we'll take a deeper dive into the technicals and look at the chart patterns of these broader indices, because the markets are really at very key levels and critical levels. So we'll discuss more in that detail in that video. But what we can see is that in fact the market was down on, it lost about 184 points. It was down about 3%, and it's also down year to date about 111 points, or minus 1.89 percentage points. So the market has actually pulled back from the highs that we saw in 2025 and is negative for on year to date basis. This is the broader index S&P 500 that we are looking at as our benchmark. And if we take a look at a stock such as Altria, what we can see is that this stock actually returned 3.47% to the investors, and year to date it has been up about 10.52%, so clearly beating the market averages. Jack Henry, when I did the video a couple of weeks ago, this was one stock which was, you know, at really critical levels, and we were discussing, okay, maybe it's is about to break to the upside. And this week this is exactly what we saw, and the stock was up 10.19% for the week, which is really impressive, and year to date it's up 9.12%. So clearly it also on a weekly basis it is beating the market, and year to date basis it is also beating the broader market. So Starbucks is not one of our core stocks, but it's on our watch list. But on a year-to-date basis, it's also beating the broader index. Now, one of the things I forgot to mention about the Jack Henry is that last Friday it actually made a new 52-week high, which means that it is breaking out, and then higher. Maybe it is actually likely to continue its momentum to the upside, and actually we're going to expect further highs as well for the stock. So really interesting stock to keep an eye on. Alibaba has had a fantastic run in 2025. We have recently seen some pullback, but it's still really impressive. It gained 6.12% on a weekly basis, and then a year-to-date basis, it is up 65.85%, which is really impressive if you see where the broader market is. Now, AMD is on our watch list. This is one of the stocks which did gain a little bit, like about a half a percentage point on the week, and this week was really volatile if you compare what the major averages did, and on a yearly basis it is down about minus 17%, but it's on our watch list. As you can see that the market rotates through sectors, so we are watching this really closely. This is why it's on my list. Now, Abbott Laboratories, it actually it was negative for the return negative for the week, so minus 0.63%, but it was one of the stocks which had been making new 52-week highs for quite a few days, but maybe it's overextended and some investors took some profits. But if you look at on a year-to-date basis, a really impressive 21.88%, and look what the average S&P 500 cash is returning to the investors. And this Gilead Sciences, it was up 2.71% for the week, and for the year-to-date basis it is up 27.11%. Really impressive. So clearly you can see that some of the individual stocks are actually clearly outperforming the broader indices. So what we are looking at is basically the Magnificent Seven, the tech stocks, which had been driving the market higher. Perhaps the investors are taking some profits, or there is rotation happening, money moving out into different sectors, maybe money also moving out of equities and going into bonds or some other asset classes. Everything is possible, but clearly we can see there are stocks which are actually performing pretty well. Now, let's take a look at some of these stocks which are additional stocks which have actually done quite well. Let me unhide the rows. Here we go. So as of 8th of March, last Friday, I picked up 4 additional stocks which are doing pretty well last week, and each one of them has actually performed positive return, and it has beaten the market on weekly basis clearly, and also they're beating it on a year-to-date basis. Let's take a look at which sectors they belong to. So let's take a look at this Yum Brands. Oh, this is wrong because I think I flipped the cells, so my mistakes. And this one is actually in the restaurant sectors. And what we can see is that Yum Brands has been up 3.94%. On the weekly basis, it is clearly beating the market S&P 500, which is down minus 3%, and on year-to-date basis up 21.15%. So really impressive. And then we have another stock which is also in the restaurants sector, which is the McDonald's, and the McDonald's was up 4.2% for the week, and it is 10.83% on the year-to-date basis. And once we take a look at on the charts, it is actually doing some really interesting pattern formations. And then we have another stock which is in the telecom sector, which is Verizon, and it on a weekly basis performed much better than the average, 6.87%, and it's been up 17.23% on a year-to-date basis. And then finally we have the Bristol Myers Squibb, which is in the pharmaceutical sector, and this one returned 2.47% on a weekly basis, and it's up 9.21% on a year-to-date basis. So clearly you can see we have got stocks which are you might not necessarily hear them on a daily basis in the media. It's not like Tesla, Apple, Meta, Amazon, some of these Magnificent Seven stocks, but these stocks have been performing really well, and the numbers actually speak for them. So this is why it's really also important to actually uh, do our own work and research and try to look inside the data. What do we see? Because in markets, it will always be a rotation happening. Sometimes the dividend stocks come into play depending upon the macro environment, inflationary, deflationary, etc. And some of the times it's the growth stocks which are leading their way, and which had been the case, when the market bottomed back in October of 2022, 2023, 2024. We had a fantastic run in those stocks, and now we are also looking at some of these stocks performing really well, and some of the other stocks performing perhaps not that well. So let's have a quick look at their chart patterns. So let's take a look at Jack Henry. And in Jack Henry, what we can see is that, look, it made a new 52-week high, and it's a daily chart, really strong candle formation. With this kind of candle formation, the chances are we are likely to see further move to the upside, and perhaps $200 per share level might be on its way. As long as this is our really key support way down 163. That should be intact. Now let's take a look at just an expansion. Let's see what sort of expansions we can get from a Fibonacci levels. 196, then 205. So these are the regions we could expect the market to reach to. Really strong looking bars, very strong bars, so quite a nice looking chart there. So if we take a look at Altria, which is in the tobacco industry, this one also pays really nice dividend. They announced a dividend of $1.02, and our key point came in right here, 38.2% retracement. That appears to be not a confirmed double topping pattern, but the chances are we are going for $60 per share level. So maybe it's going to make another 52-week high, which will be really interesting, and the expansion 1.6 when it comes around $62 per share level. Okay, so this is what we are watching in Altria. Now let's take a look at GILD. There we go. You can see that the stock has been in a really nice uptrend. Look at the major averages here. 20-day moving average, which is above the 89, which is above the 200-day moving average. Really strong momentum, and for quite a while, for a past week, it was almost on daily basis making new 52-week highs, which it did last Friday as well. So really strong momentum stock. Let's see if it gets its momentum to the upside, and then let's take a look at ABT, which is the Abbott Laboratories. Now this one has had a little bit of a pullback, and this is where the breakout happened. And if we just draw our box and a year move, it went to the 1.272 extension of the AB leg. So there we go. That is where it found its resistance from. It's pulling back right towards the 20-day moving average, as I think it's likely to hold, and as long as it's held, maybe it's got a chance to move to $152 per share level as well. So that remains a possibility. It is just finding support from 20-day moving average. If it is not able to hold this support, this pullback could actually perhaps increase, but still beat the market, and on a year-to-date basis also beating the major averages. Now let's take a look at MCD, which is McDonald's. So the McDonald's stock is really interesting, because it looks like the stock might be breaking out of the highs it formed back in October of 2024. Ideally, I would like to see 2 consecutive daily closes above this level, because we have seen in the past that maybe there was a chance for a breakout, where it was a failed breakout. But here it's a different situation, because over here the market was more range bound, and here it seems to be coming really strong from this retracement of 61.8% level, and if we see a continued rally, then it could be till 347 or $350 per share level is likely to be on the cards. Now let's take a look at the Yum brands. Here we go. It's another really interesting chart. Look how strong it has been in terms of its trend. It also pays 71 cents in per share in dividends. And you can, one of the things that we notice is that these restaurant sector based stocks, they went into a pretty long consolidation right here. You can see that, and this one actually broke out of it. We have seen, let me draw the measured move like a box right here. Here we go. So it's pretty much right at the top end of it. So that is one thing I think is meeting its target now from the basically a measured move perspective. And the McDonald's is kind of doing something similar, that it broke out of a quite a long range bound situation, and looking pretty strong McDonald's stock as well. Now Verizon. So let's take a look at this one. There you go. Um, this one also pays a dividend of 67 cents. It's pretty nice dividend. And here it was also a you can see that it was pullback right into this level. Let me actually draw what level it was, where it pulled back to. Very close to 50%, just eyeballing. And if I take a look at this, yeah, there you go, 50% exactly. It pulled back, and now it has a fantastic run up. It is momentum is really good, because the price is above the 20-day moving average, which is above the 89 period moving average, and also the 20-day moving average is above the 200-day. So that's nice. And now if the momentum remains strong, these averages will begin to diverge. So for example, the 20-day moving average and the gap between the 89 will increase, something similar to what happened here. So that will be a really strong move, or start of a really strong trending move when the moving averages begin to diverge. And what we can expect is, if we just use the box method again, so we take a measured move essentially. Here we go. So as long as this move remains, it's not a false breakout, I think the stock has got a chance to hit $53 per share level. So this is what we are watching in these five stocks that we are watching, which are beating the market. And I in fact also found four more stocks past week which are also beating the market on a weekly basis, in returning to the investors positive returns, whereas the major index returned negative. And also, of course, on a year-to-date basis, these stocks are also returning positive returns to the investors. So something we should make a note of, what kind of stocks these are and what kind of sectors these are in. And this is what we are watching. So I would like to thank you for watching the video, and please do subscribe to the channel if you find our video of educational value. And if you really like the video, then please give it a thumbs up. And again, just one more request again from you guys, all the subscribers, please do look at the link in the description, and I will really appreciate any help from you guys. So thank you very much, good luck, good trading, and speak to you guys soon.